Good Thursday morning, everybody. Welcome back. I'm Maria Bartiromo, and it is Thursday, August 14th. It is 8 a.m. on the button on the East Coast. President Trump gearing up for tomorrow's high-stakes summit with Russia's Vladimir Putin in Anchorage, Alaska. The president says he's pushing for peace, but he is preparing for the worst if Putin does not agree. Watch.
Will Russia face any consequences if Vladimir Putin does not agree to stop the war after your meeting on Friday?
Yes, they will. Yeah.
What will the consequences
There will be
be?
consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
This comes after a virtual meeting with European Union leaders and the president of Ukraine, Zelensky. President Trump said that he and Putin will not discuss territory disputes, leaving that up to him and Zelensky. Joining me now with the very latest is the Treasury Secretary of this great nation, Scott Bessent. Mr. Secretary, it's always a pleasure. Thanks so much for being here today.
Good morning, Maria. Good to see you.
And you've said the president is ready to send a very clear message to Putin on sanctions. You are also calling on Europe to back Washington's push for secondary sanctions on any nation still buying up Russian oil. What do you expect from this conversation, and what do you want to say to European leaders right now on that subject?
Okay, so two pieces there. One, the conversation, President Trump's going to go in and, he has a negotiating strategy. He's been putting a lot of the pieces in place over the last couple of weeks and days. So he's going to go in a very strong position. And then two, I want to say that it is time for our European counterparts to put up or shut up. They keep saying, oh, the U.S. should do this, U.S. should do that. President Trump has put secondary sanctions or secondary tariffs on India because of their consumption of Russian oil. And the Europeans haven't done that yet. As a matter of fact, the Europeans are buying the refined products that the Indian refiners make. So we need some coordination here. So if we are going to have a united front, which will give President Trump maximum leverage, then I think that our European counterparts need to do their part.
Well, Mr. Secretary, I mean, look, you've stated that sanctions on Russia can go up or they can be loosened depending on the outcome of this meeting between the president and Putin. But look, President Trump allowed his own self-imposed deadline to pass without doubling down on those sanctions on Russia. Why? Did he want to go into this meeting without the pressure of knowing that he just put these, doubling down on the sanctions? Because, the president was very clear. He said he's giving Putin 50 days until a ceasefire. Then he came out, he said it's 10 days away. He had a deadline of last Friday, but it came and went.
Well, Maria, two things. He brought the deadline back from 50 to 10, and it didn't come and go because we put the secondary tariffs on India. So he's created leverage there. And I think that he's shown President Putin what's in store if things don't go well in Alaska.
So do you believe there's any shot that Putin is going to agree to a ceasefire?
Maria, I don't know. What I do know is this war never would have started if Donald Trump had been president. He is cleaning up the mess that he was left with. He is a president of peace. And he wants to see the bloodshed stop. We will see if President Putin is ready to negotiate. And this is his chance. If he wants to stop the bloodshed, President Trump is willing to keep the talks going, and he's already talked about this is the precursor for a second round of talks. So it's going to be up to President Putin. And as you know, President Trump's very persuasive.
Yeah, and are you willing to go as far as putting those secondary sanctions on China? They're also buying oil from Russia.
Maria, I think everything's on the table.
Okay. I want to move on to your approach, Mr. Secretary, because I went back to one of your confirmation hearings, and in your earlier confirmation hearing, you talked about how you can leverage the U.S. government assets. We've got great assets in America, and you talked to the Senate Finance Committee about this. I want to run that and get you to talk a little more about monetizing the U.S. balance sheet. Watch this.
I do believe that there is discussion to leverage the asset side of the U.S. balance sheet in favor of a fund, whether it's a sovereign wealth fund, something, as you discussed, a supplemental fund. So that is very much in the mix. We always look at the debt of the United States, and we have fantastic assets that could be earning, leveraged, or used for multiple revenue-generating opportunities.
Mr. Secretary, I thought that was a fantastic comment that you made in terms of the assets that you can actually monetize on America's balance sheet. You've done so much since that testimony. Golden share in the Nippon-U.S. Steel merger, 15% revenue from certain NVIDIA and AMD chip sales to China, the money from the reciprocal trade agreement and the tariffs, Fannie and Freddie taking those companies public. Tell us how you're moving forward on those plans to monetize America's assets.
Well, Maria, again, there are tangible assets and there are intangible assets. If we look at the tangible assets, is going back to drilling, whether it's natural gas or crude on public lands. There is a huge amount there that can be done in a safe, sound, and efficient way, and that will both bring down the price for consumers and put money into the Treasury. President Trump never stops thinking about the opportunities. The biggest intangible is the ability to trade with the United States of America. And as you said, President Trump has taken that intangible to be able to sell to the U.S. consumer, and it has applied a tariff to it with virtually no retaliation. So, all these trade deals, we are getting tariff revenues and everyone else is standing down. The other thing that he's done is he has allowed some of these countries, like Japan, like Korea, to stabilize their tariff rate by being willing to make big investments in U.S. strategic industries.
Well, look, the president's tariff plan brought in more than $28 billion in July, a fresh monthly high. Tariffs are becoming the third largest source of income for government. And the last time you were with me, you told me that you would expect $300 billion in tariff revenue. But I think you are increasing that expectation right now, aren't you?
I am. So I think August, September is going to be a very good test. I've been saying that I think we can take in $300 billion, and as the Treasury Secretary, I like to be conservative, but there's a chance that I'm going to have to substantially upgrade that number. And Maria, the way to think about it for your viewers is every $300 billion is 1% of GDP. We were left with a mess. The deficit to GDP, 6.5, 6.7%, highest when we were not in a recession, not at war. So just the tariff revenue can bring that down into the fives, which fits with this administration's plan of getting the deficit to GDP back into the threes, the long-term average, before President Trump leaves office.
And another source of revenue has been from the chip makers, NVIDIA and Advanced Micro Devices agreeing to share 15% of their China sales with government in exchange for those export licenses. Mr. Secretary, that's pretty aggressive. This was part of a deal to secure export license for the semiconductor companies. Tell me more about this. Is this going to be a precedent in terms of you're looking at companies to share their profits with government?
Well, Maria, we'll see. These are two very special companies and a very special set of conditions as we look into selling to China. And what I think is very interesting is that we're allowing the sale of the NVIDIA H20s. I'm not sure what the comparable chip is for AMD, and that's about 5 levels down the NVIDIA tech stack. And now the Chinese don't want their companies to buy them, because our rationale for allowing this, other than taking in revenue for Treasury for this strategic industry, was to make U.S. chip makers the global standard. Now the Chinese are looking at this for a minute and saying, whoa, we don't want NVIDIA to become the Chinese standard, and But we're also seeing today that the Chinese AI company DeepSeek is having trouble going to the next level using Huawei chips. So they've kind of backed themselves into a corner. They don't want to have a U.S. standard, but their domestic supplier seems to be subpar.
Yeah, I was really taken aback when I first saw that the CCP was telling its local companies, don't use the NVIDIA chip.
Yeah, well, but what we're seeing, we do not want Huawei to have a digital belt and road. So we are willing to, with our allies and with countries that we believe will protect the technology, we are willing to let the U.S. standard permeate the world. And I think that's one of the ways for the U.S. to exercise both economic and AI dominance.
Yeah, that's a great point there in terms of what you've been able to look at. We're going to be watching that way of gaining revenue in terms of whether or not you're going to be looking at that for other companies doing business in China. Look, we were just doing a whole story with Sebastian Lai, Jimmy Lai's son, about what happened in 2021 in Hong Kong. And, you know, you've got Wall Street firms taking companies public on the Hong Kong Stock Exchange right now. And the China Select Committee calling on Jamie Dimon and Brian Moynihan from J.P. Morgan and Bank of America to not back CATL, the battery maker. How does the CATL Hong Kong IPO, led by these American banks, and being on the Pentagon 1260 list of Chinese military companies square with the president's America First investment policy that specifically speaks directly to that kind of a situation?
Yep, well, you know, that's going to be for the regulators and for the underwriters to decide. What we are trying to do in this administration is we are trying to de-risk our relationship with China. There's 6, 7 strategic industries that we saw during COVID that the Chinese were not reliable suppliers. We're also seeing with rare earth magnets that they've imposed export controls. So we are going to become self-sufficient and dominant in those areas. And obviously battery technology is one of those.
And pharmaceuticals is another one, because we saw the CCP threaten that they weren't going to send the necessary underlying components for our prescription drugs to America during COVID. Is the president going to hold that promise that if these pharmaceutical companies don't start building it here and making the drugs here, that he's going to put an outsized tariff on those companies?
Watch this space over the next couple of weeks, Maria. I think you're going to see a lot of announcements around pharma, and I think you're going to see a boom in pharmaceutical plants being built in the U.S.
I'm sure. Fannie and Freddie I've got to get to as well, because the White House is exploring how to monetize Fannie and Freddie, the mortgage originators, and their stakes in these companies. The initial sale is expected to be in the billions. Is it fair to say that you could expect a sale to be as high as $30 billion or more in selling your stakes there?
Well, it'll depend on the size of the stake and the overall valuation of the companies. We are examining all the options in terms of how to proceed. We've had lots of banks coming through. The president is very engaged with this. The housing market is obviously very important in the U.S. We've got an affordability crisis. So there are 2 pieces here, Maria. How can we maximize the value for the U.S. taxpayer with Fannie and Freddie? On the other side, how can we keep mortgage rates, the spread between mortgages and treasuries flat, or even bring that down to address this terrible affordability crisis in housing that developed during the Biden administration?
It seems like you're going to have big demand for those stakes in Fannie and Freddie. A lot of viewers wanted to know about that.
They're very unique companies, and again, you know, they sit in the middle of the U.S. housing ecosystem, and you know, I think you are going to see, I know you're going to see over the coming months and quarters, this administration, now that we're doing peace deals, trade deals, tax deals, we are really going to work on this housing affordability crisis. That's one of my big projects for the fall, along with several other branches of government.
Mr. Secretary, you're also pretty much revaluing gold, right? The Treasury has pegged the 261.5 million ounces of gold at $42.22 an ounce from a price set back in 1973 for $11 billion. If you look at current market prices of gold, you're talking about a number way above $750 billion. What's the story on gold?
Look, we've got the large gold holding. I doubt we're going to revalue it, but we are going to keep it there, again, as a store of value for the American people. We've also started to get into the 21st century, a Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
And Mr. Secretary, all of these ideas to monetize the asset side of the balance sheet of America, is that partly the beginnings of this sovereign wealth fund that you spoke about in your hearing back in January?
I think that these are all standalone ideas, and that as we get more into them, it will require legislation. We'll do it through statute to create a fund to hold these and to oversee them in a good way for the American people, for future generations. I think this is going to be one of President Trump's great legacies. He's going to be the president who created assets for the American people, not debt.
And he's also incredible when it comes to getting wealth into this country. I mean, look at all of these companies that have been saying they want to invest in America, and all of these foreign countries doing the same. But, Mr. Secretary, I've got to ask you about the Federal Reserve, because you're calling on the Fed to start cutting interest rates. You suggested the other day that the benchmark should be at least 1.5 points lower than it is right now. Fox Business has been reporting that you're leading the interviews with the potential Fed chair candidates. But we just had Jason Trennert on a moment ago, and I know he's a friend of yours, and he came close to working with you at the Treasury. But even he, being a supporter of yours, raised a red flag about the sitting Treasury Secretary telling the Federal Reserve that they need to be cutting rates by 1.5 points. Do you find this unusual, that you find yourself in a position of telling the Fed what to do?
Couple of things, Maria. I didn't tell the Fed what to do. What I said was that to get to a neutral rate on interest, that would be approximately 150 basis point cut. I did not call for them to get there. The other thing that I said was that perhaps because they had bad BLS data in June and July, that perhaps a 50 basis point cut in September was warranted.
Yeah, and do you believe that at this point we are ready to see a 0.5 point cut, given the fact that they've been so late in terms of doing 25 basis point cuts all this time?
Well, crawl, walk, run. Perhaps they'll start with 25. And then accelerate. I can tell you that based on the 50 basis point cut in the September of 2024, right before the election, that the conditions now are slightly more favorable for a cut. But again, I believe that there is room, if one believes in the neutral rate and where it is, that there is room for a series of rate cuts. And again, I'm not calling for one. I didn't call for one. I just said that a model of a neutral rate is approximately 150 basis points lower.
Thank you for that. Thank you for that clarification. I know our audience wanted to make sure that they understood where you are on these cuts to come. What are the most important attributes that you're looking at when, in fact, vetting these people for the chairman of the Fed job?
Well, Maria, let's think about the three pieces of the job. There's monetary policy, there's regulatory policy, and then there's running the institution. On monetary policy, we want someone with a broad knowledge, brings credibility, can bring credibility to the markets. But I also think we should have someone, when you go back and look, Alan Greenspan brought a unique perspective in the 1990s. He had a very open mind, and he saw that the productivity boom that was happening through the installation of office computer hardware through the internet. And I think that there's a very good chance we can have the same kind of productivity boom. So, I want to see people who are forward-looking, not backward-looking.
Right.
On regulation. I think that since the great financial crisis, we've been in a regulatory straitjacket for the banking system.
Yep.
I'm a big proponent of small banks. Small banks have gotten crushed by regulation, and that I'm not alarmed by the increase of the so-called shadow banks or private credit. But I just think that when you see this big credit increase outside of the regulated system, and there's an arbitrage there, it tells you that the regulatory regime is too high. And then three, the Fed is a sprawling organization, and I want to see someone who is going to rationalize it. This building project that, I'm not a builder, but I can tell you that I would not, if my company was losing $100 billion a year, which the Fed on its asset mismatch is going to lose $100 billion a year for the next few years, then I probably would not have embarked on a project like this.
Yeah, and by the way, we know that President Trump is in fact a builder. So that was his entire career before going into Washington. But, Mr. Secretary, speaking of regulation, you are also pushing for a ban on single stock trading in Congress, calling out lawmakers like Nancy Pelosi and Ron Wyden for their eye-popping returns. And, I mean, I was just taken aback when I saw some of these things. Pelosi says she does not own any stocks and has no knowledge or subsequent involvement in any transactions. And yet we went back and looked at the dubious timing of Paul Pelosi's trades, her husband. Back in January 2021, he bought Tesla stock before a Biden executive order requiring electric cars for federal workers. Back in March of 2021, he exercised $2 million in Microsoft options 2 weeks before Microsoft won a $22 billion Army contract. In June, he bought up to $11 million of mega-cap tech stocks amid technology legislation. And then in 2022, he bought 5 million shares of NVIDIA before a vote on $52 billion new chipmaker subsidies. I mean, this looks awfully coincidental.
Look, it looks terrible, and given the level of trust in Congress, I think that they can do a tremendous amount of self-help. In my former private firm, we weren't allowed to buy individual equities. We could buy ETFs. We could buy money market funds. In my capacity as Treasury Secretary, I can only basically own S&Ps and the government bond funds. So, I think that Congress needs to step back, think about the damage that they're doing to themselves. Many people come to D.C. to work for the American people, and they should not be tarnished with what is obviously a ethics problem here. And for Speaker Emeritus Pelosi to come out and say, "Well, I don't own any stocks," that's like me saying, "Well, I don't own anything; my children own it." That her husband is kind of the Gordon Gekko of San Francisco.
Yeah, and Ron Wyden, by the way, cleaned up, according to this tweet that I'm looking at right now. Democrat Senator Ron Wyden is the best stock trader in the U.S. Senate, cleaning up in 2023, generating a return of 78%. Wow. Well, we're going to be watching that. So, but what you're saying is, look, you can buy ETFs, you can buy index funds. I'm a journalist, and I own basically only ETFs. I don't, trade in individual stocks. Why shouldn't lawmakers have the same rules?
Well, I can tell you, for a lot of what's going on, that list that you just listed with Paul Pelosi, the SEC would be knocking on a normal fund manager or individual's door. So why don't we clean this up? Why don't we let the American people have some transparency? This administration is very transparent. Why don't we do that? I think that they should be able to buy ETFs that are a certain size. I think they should be able to buy bond funds. And I think there should be a holding period. Because there was, I'm not going to call out names, but there's some of these legislators that have over 1,000 trades in a year. My hedge fund didn't have 1,000 trades in a year.
Oh, that's incredible. That is just outrageous. Mr. Secretary, thank you so much for being here. This was a wonderful interview, and we appreciate you walking us through the multiple revenue streams in play in government and how you are, in fact, leveraging that balance sheet. Good to see you, sir. Thank you.
Good to see you, Maria.
All right, Treasury Secretary Scott Bessent.